Hello everybody, this is John Novak with Nexgen Software. I'm going to give you guys a lesson on trend trades, and I just really want to show you why, as a new user of our software, you want to focus in on high probability trend trades. So check out this lesson. Alright guys, so I wanted to go through and do a trend trade lesson, and these are all the lessons that we gave on Friday. So the first lesson, obviously when you guys are doing trend trades, to have the right look or the correct look on your larger chart. And again, this look is very simple. Strong trigger lines breaking down below all of our Fibonacci support. And there's really a couple areas where we can have a trend trade happen from. When we look at our smaller chart, we've got our mid band, which is the magenta line. We've got Fibonacci resistance areas. So really what we're doing is we're kind of looking at, the divergence that's happened prior. And, again, what we're doing is we're kind of building areas for ourselves. So somewhere in this area up here, I'll draw a box in. As long as we stay basically below 68, somewhere in this area, we're looking for a short trade. And again, what I've done in this situation is I've opted for just put it in a limit order kind of at the bottom of that area, so there's not a whole lot of thinking to do. And then you can see down here at the bottom where I drew my box in, 66.32 is our target. So really what we want to do, to really be the most effective, if we've got multiple Fibonacci areas or Fibonacci areas on the large chart helping us, again, we want to be a little bit more assertive with our entry. Now keep in mind, look where our stop is. It's above the 14.2 reversal bar marker. And, realistically, we didn't get up to the best spot. The best spot for us to go short technically would be 64, 65, 66, 67. But because we've got the fib on the smaller chart there as well. And you can see our small triggers are going up pretty strong too. So usually when our small triggers are going up pretty strong, that's, an indication that we're going to make it a little bit further into the window. The reason that I opted for 61 first, and look, I'll just do something a little bit different here. We'll add on to the position if we get a little bit deeper into the window. So again, realistically, 65 or 66, probably a better spot for an add-on. Put it a few ticks above the last high, and then, you'll see. Again, you don't have to add on to a position, and there's two things that you can do. Number one, you can get short, and then you can manage the position. Or number two, essentially, as long as we don't take out this area here, look, I'll draw a circle on for you. As long as we don't take out that area and then start making up bars on our large chart, which, again, it could happen. But you can see down at the bottom, we had this divergence, this negative 30 number. And with that negative 30 number, it usually means we're going to stop out the high pivot. So, and you can see that's probably the perfect spot for an entry. So again, as long as we don't make up bars on the big chart, it's not really going to matter. And again, think about our objective. Our objective is to make it down to Fibonacci support. So either prior lows and then support, and again, obviously at some point you're going to reduce your risk. And again, we're not going to get too much into the management of trades here. The idea behind what we do and the idea behind what you need to learn to be most effective is you need to trade the highest probability trades first. And really, really, really strong triggers and really perfect looks on the large chart are the trades that you want to take to give you really the best opportunity to make money in the market. And this is really the things that we go through in class. We go through things like reading your trigger lines. Look at these small triggers right here on my 5-1 chart. They're still down. Even though we had a couple bars up, we're not going up. Look at my large chart, look at my small chart. And again, if you make too many decisions on your small chart, you're going to miss the opportunities that the large chart presents to you. So again, you know, there will be times where, of course, you'll bring your stops down and you'll start to protect your equity. And there you go. You can see we've made it down to our support, which is basically our target. You know, so in this situation, let me turn on the trade so you guys can see them. And again, guys, the lessons that we are going through here, the same thing that's, shoot, hang on a second. Let me turn on all of the orders so you can see them here, text and markers. Okay. And again, look, take a look at this. You can see we got the initial short, and you know, again, the whole read is because of the large chart. That we're going all the way from Fibonacci resistance down to at least the first Fibonacci support on our small chart. And you can see, I mean, if even just having a limit order here at 32, you can see that trade, you know, really 20 to 30 ticks. I mean, that's really what crude oil traditionally will do, 20 to 30 ticks. And then, you know, again, once we reach that first target on the small chart, you know, we have to start thinking about, do we want to do more trades? So again, a couple of things that we look at. Number one, you know, you can see where our short areas were up here, the mid band from the larger chart, closer to the reversal bar marker, probably the best spot. And then, you know, again, don't manage your trades too much based on the small charts, or you're going to end up missing the big money. Now, once we get to the first bounce spot, we have to kind of evaluate and say to ourselves, you know, do we want to take another trade short? And there's two things that we look at. Number one, do we have areas that help us? So again, you'll start to see these areas as you spend more time, but watch, I'll place a limit order at 48. So number one, we have a 1-to-1, the yellow dots at 66.50 on our large chart. That's a Fibonacci area that will help be resistance for us. Also, on our market flow chart, you'll see we've got a magenta line at 66.50 as well. So not only do we have fibs on the 14.2 chart, but we've got market flow resistance at 66.50, and we also have our mid band for a trend trade on our 5-1 chart at this spot. And again, the entire trade is predicated on one thing. Look at this 14.2 chart here. Look at the trigger lines. What are the chances that our Fibonacci areas and our market flow resistance and the 1-to-1s right here aren't going to cause some type of a bounce to the downside when our triggers look like this? It almost always does. And again, if it doesn't, we end up taking a loser, but you know, almost always does. And if it does lose, then we can reevaluate. But again, the market going up is where we want to go short. So let's look at the other chart here. And again, you see what I'm talking about? We want to get short when the market's going up. We want to get short when the market's going up. And again, we use the smaller charts to help us. So take a look here. At this low, what do you see? You know, there's a couple of things that we talk about. Number one, trigger lines, right? Small triggers and synthetic triggers. And again, we also talk about whether there's divergence on the low or non-divergence. You can see we just got filled. So anyway, if there's strong triggers down and no divergence and areas helping on the larger chart, we're usually, you know, 66.50 is probably the perfect spot, but we're usually going to make at least one more push down from that spot. So again, you've got a couple of choices. You can get in a little more assertively at that spot. And again, see the market flow resistance right here at the 66.50 if you kind of take that across. Again, market flow resistance. Could it go up to the mid band or the fib on this chart? Sure, it could. And if it does, that's okay, as long as it doesn't make up bars on the 14.2 chart. And again, the reason we're getting in a little bit early is because we've got market flow resistance and 14.2 chart resistance at 66.50 and no divergence on the small chart and strong triggers that broke below the blue fib. So, again, we should get another short trade here. And again, once we start getting bars to the downside, look, we'll trail our stops. So again, getting in on the way up towards 50 allows us now, after a down bar on the small chart, to literally only have 3 ticks worth of risk. Again, we start off with a 10-tick risk, but realistically, once it bounces from there, which it usually does with that much strength on the big chart, we're able to then reduce our risk pretty dramatically. And again, we want to look at the pivot before our trend trade. Was there divergence? No divergence? And again, as we start to get down into support, we're going to obviously manage our position, and we're going to make sure that, again, our large chart wins out. And you can see here, the large chart's winning out. And again, obviously, it's going a little bit further than our 20-tick target that we set. Actually got a little bit of slippage there. So, good thing. So, again, these are the lessons that we're going to go through with you guys. And this was Friday, August 10th. So you can go back and look at it in your charts if you want and go back and study. And, we give you a lot of information on what to study and how to study and when to study. And then there's another trick that we use in our trading plan, which you'll see a lot, is what we call triple divergence. And when you have divergence, these negative numbers on your charts at the bottom. So there's 999 on the left, there's a 74 on the 5-1 chart. And let me bring over all 3 charts, because you really don't understand this until you see it on all 3 charts. So again, when to stop, that's the most important thing on the planet. If you hit a horizontal line like a 1-to-1 or a fib or some type of support, and you have what we call triple divergence. So it just means that you have negative numbers at the bottom on all 3 charts. So just call it triple divergence from some type of line of support. Stop taking shorts. And again, every once in a while, you're going to miss a winning trade. About 70 or 75% of the time, you're going to miss a losing trade. And you'll see. So we'll progress forward through this lesson and you'll see. But it's the reason that we're stopping is, number one, we have a fib now down there at 66.14. But number two, we had 1-to-1s down there. So look, right here, this is the spot where if you were only looking at your large chart, you'd say, hey, wait a minute, we have another short trade, right? And this is the one that it looks perfect, and it's always going to look perfect. And this is why triple divergence is one of our trickier ones to get used to. This is the one that gets you in trouble and gets you, the market will give money, give money, give money. And then they will work, or the market, for whatever reason, will work very diligently at taking that money away from you at the end of a trend. And again, it's just experience. 21 years of experience with our software tells us if you get triple divergence from a line, don't go short. And again, even if you're waiting for the market flow, look, see that bar right there? That's the bar. You'd be like, okay, I'm going to do it anyway because there's a down bar. And again, this bar right here, if you were using the automated system, to get you into a short trade, and you missed the fact that we had triple divergence at some type of support, you're going to take that short trade. And again, usually it'll go down a few ticks, and then you'll end up losing money. It happens about 75% of the time. And again, it's very tempting to go short, but, here's what happens. You end up losing money. And this would have been where you lost your money. And again, we made some really good money on the way down. And, you're going to make this mistake, and you're going to go back and evaluate your charts. Go, oh, man, I traded in triple divergence. and you'll post your picture in the room, and I'm going to say you traded into triple divergence. So look, this is where you'll realize after you post your chart in a room that I say, hey, look, you traded into triple divergence. And you're going to be like, oh, shoot. And then we'll say, okay, pay attention next time. So as we kind of go forward a little bit here, you'll see, look at what the triple divergence did. I mean, it essentially reversed the entire trend. And in reversing the trend of the market, essentially, look, we're breaking out to the upside on our small charts. We have really strong triggers going to the upside on our 14-2 chart. And again, one of the precursors for our trend trade longs or shorts is strong triggers. So when we start to break above Fibonacci resistance with strong triggers and the small chart has a green background, we start looking for our trend trade rules to become true. And again, as we start to pull back here, you have to kind of look at your large chart again and say what areas help us on the large chart. And you can see we've got that same yellow 1-to-1 at 50. Over here on our 5-1 chart, we've got 51 and 49. So optimal, this is an optimal look with an optimal entry or opportunity at about 51. Now, instead of just putting a limit order there, just in case, and let's just say you're a little unsure of your entry. So as you start to get closer to the area, and again, I want you to keep in mind, if you got in at 51, you're doing so on the way down. And the more you have our software, the more your belief in that 51 area is going to grow. And again, look, let's go through the same things we talked about before. What's at the high on your 5-1 chart? No divergence. So look, no divergence, so you're not going to get too deep of a retracement, but probably enough to, at least get to some support areas. 53, 51, usually the mid band if it's lower than the fibs. And then look, I turned on the automated system here. So if you're a little unsure, you think, oh, maybe it'll be a little overrun. Again, look, that would have been our in right there. We just hit 51. And, the reason you'd put it at 51 is because you think you're going to get to 50 or 49 or 48. But again, look, I turned on the automated strategy. So if there's no up bar here on the 5-range chart, we won't get a signal. Now, confirmation costs money, right? So I'm just going to mark this for you guys, the spot to buy. If you're really confident with the strength of your trigger lines on your 5-1 chart and there's no divergence, just get in at 51. And again, look, watch what happens. On the market flow chart, it got you into a trade. So again, look, I'll kind of average the price out. So look what we end up with. We end up with 56 instead of 51. And, again, look, we said probably would go to 49, give or take. But, again, you see how we kind of put ourselves in jeopardy here. Jeopardy of maybe getting stopped out, and we're going to have to do the trade twice because it made it a little bit deeper. And, again, if you're if you're long at 51, it allows enough room to the 14-2 reversal bar marker to really give you a lot more room. So anyway, we'll let this one kind of play out and you'll see, how this progresses. Again, remember, we started with triple divergence at the bottom. And then that triple divergence broke our resistances on the 5-1 chart. And then we had no divergence. And then, we said, hey, the mid-band's probably going to be the spot, and it was. And anyway, we used the system, which is fine. That's okay. And, realistically, we're looking for 20 ticks, give or take. Obviously, if, you can look at your large chart and see that we have our white dotted 165 EMA up there. And anyway, that just tells us that we have room to our target to get our 20 ticks plus. So again, if we were long from 51, we'd already be up, right? 20 ticks. So again, it just makes a bit of a difference in, where you get in and why you get in and how you get in. And, again, the conditions of the 5-1 chart and the trigger lines before you ever get in. And again, you can see we pretty easily made our 20 ticks on here, even with a little bit less than optimal entry. Now, you can see what's happening, right? Again, we had a couple of really nice short trades. And we got the first trend trade long that had no divergence on it, which is great. And again, as you know, we're hoping that we get the opportunity for more trend trades alongside if we get them. And, we'll see. We just have to kind of watch now. And obviously, it looks like we got out a little too soon there. Could have had some more money on that one, but that's okay. Now, look at your 5-1 chart. What do you see? Very simple. Divergence. Now we have divergence. Try to spell that right. So what's going to happen? We're going to get a little bit of a deeper retracement, typically. We're going to need some type of a pivot stop out. And again, when you're looking at your charts, you're saying to yourself, well, if we get to the mid-band, that's probably a pretty good spot, right? So look at the kind of the big picture here. So we get trend trade short, and then at the bottom we get triple divergence. So trend trade short, up at the top, divergence. So what are we going to do? If there's no divergence, we're getting in on the first push down, typically. If we get divergence, we're usually going to get a pivot stop out. So again, this is a lesson that we teach a lot. Obviously, if you had a limit order at 75 or 76, right there, getting filled at the mid-band on the way down, that's the first kind of spot to watch. And, some of our traders are still going to go long at the mid-band anyway. I'm not going long just to kind of prove a point here. So now we have a pivot, right? And again, if you went long at 75, that's okay. You have to be aware that now you've gone long into the face of divergence coming down. And, for whatever reason, it's pretty typical if you have divergence at the top and, if you take the trade, that's fine. You just have to be aware of it. Usually what's going to happen is they're going to take out the low of a pivot. And again, I'll kind of show you. And it just means that we're going to get a little bit lower. Usually we're going to retest the lows, and usually we're going to get a pivot stop out. And if you were long, that would be where you had to manage your position again. So again, let's look at this. If you went long at the mid-band, here, let me do this. Right here, I'll draw a circle. So look, there's your pivot stop out. See how we just stopped out the last low pivot? I don't know if they're going to do any more than that. They're very, very good about this. They love to run stops. And again, we want to have our stop below the 14.2 reversal bar marker. So we've got plenty of room in here. And again, look, it's the same thing over and over and over. No divergence. The first time down, you're going to go. If you have divergence, usually they go a little deeper, or I missed that one. So we put another pivot into the upside. So look, we've got literally almost no risk and to make 20 ticks here. And actually we should have no risk at this point. So, and again, if you did this trade the first time, you just had to do it a second time. And you have to be comfortable with the fact that if the trend is going up strong on the big chart, even if you have to do a trade twice, that's okay. And again, let's not lose sight of our big chart here. So with the big chart, what do you see? So look, let's take a look at it. Again, everything should start with your 14.2 chart. Strong down, trend trade short 2 times. Strong up, trend trade long, strong up, trend trade long. And again, at these trend trade spots, think about what's happening. So look, strong triggers, number one trade that we teach. You really, really, really just have to get this look. Here, let me change that to shorts. Super strong triggers, you're going to do shorts until you get to what? An area or triple divergence from a line. And then when they're going up strong, you're going to go long, you're going to go long, and then eventually you're going to get to a spot where you have to stop and, wait and see what happens. Right? Either the fibs resistance, the red lines are going to hold, which is very simple. If the triggers roll back down, we'll start thinking about shorts, or the fibs have to break to the upside. Now, we haven't reached the last fib yet. So, and again, which is about 67.10 or a little bit higher. So, again, we'll go to the small charts and we'll evaluate what's happening. Let me get set up here again. Again, look, here's your small chart. And, again, we have a strong trigger line lug, so we're trying to go long. And you can see when we get close to resistance, and again, it's easier to see on the smaller chart, we have to ask ourselves, are we too close to the red lines to take another trade? And the other thing we have to ask is, do we have divergence? So look at the high on the small chart. We haven't reached 67.10 yet, maybe 67.15. And when we get back to the mid band, which is kind of the last spot for a long, and we say to ourselves, look, we had no divergence and the triggers are strong and the triggers are really pushing on the big chart, maybe we get one more. Right? So no divergence, maybe we get one more. And this is where, we're trying to trade up to the edge of fibs, but this is where the market flow chart helps out a lot. If the market flow gives a signal here, then you can take it with, somewhat of a smaller risk. So, because we're trying to get to 67.10. So here's your market flow. Look, it had a white paint bar down, and then we had a long signal. And again, look at the long signal. It's an arrow to the upside. And again, keep in mind, when we hit fibs, you have to start being a little bit more cautious about what you're doing. And again, this could scare the newer user on the small chart because you're like, well, we hit red lines. And if you skip this one, that's okay, right? So again, if you're not totally comfortable with a trade, you don't have to do a trade. You can just wait until something is very clear. But we know from experience with very strong triggers up and no divergence on the highs on the 5-1 chart, we're usually going to get one more trend trade. And if we get that trend trade, again, we don't have to get too greedy. You can see I've got my target order at the upper end of the fibs on the large chart. So again, I just want you guys to kind of see how this works when we look at, whether or not we're going to take another long, how much you're going to risk on the position, maybe keeping your stop a little bit tighter since you got to the first edge as you almost make an up bar. If we don't make an up bar here, it may not. So again, look, I've got 5 ticks of risk to get the last trend trade that happens with no divergence before it pulled down and the rules were met. And the market flow gave a long signal. And you can see, obviously, even with this one, maybe got out a little bit early. Could have had easy 20 ticks there as well. Anyway, that's okay. Sometimes you pay for information. So, again, we go back to our large chart. And just because we got to fibs doesn't necessarily mean it's going to stop if it's a really strong market. And this is where we read our fibs and our trigger lines, and we say to ourselves, do we want to take another trend trade long, right? Based on the trigger lines on the big chart, and based on the fibs on the big chart, and based on the strength of the market, do we want to take another one? And again, sometimes you overshoot just a little bit, and you can see we've got a fib at what, 67.17 or so. So again, look, we don't have to necessarily take a trade right here. We can demand that well, now it's going to go a little further. So now I think we're pretty much in the clear. So look, all of our fibs have broken. Question has been answered, right? For sure, 100%, without question, all the fibs have broken. And we're going to try to evaluate where we're going to get another trend trade long. And we're going to start this same process over again. Did we have divergence on the highs of our charts? Again, we got to get the rules met first. So we'll wait for the rules to be met. We need our Fib to Fib oscillator to get down to 75. We need a retracement. And again, you can look at the large chart and see pretty easy where the help comes in, right? 67.10 down to 67.04, so that's pretty much the window, right? So if you were going to be a little bit more assertive with your entry, right? So again, look, you see what's happening at the high right here, right now? We've got divergence. So again, we need to go find where was the last low pivot. And below that pivot usually is where we're going to go to. So you can kind of see this one's pretty easy. We're going to get down towards, 67.10 down to 67.04, somewhere down in this area. So again, look at your large chart. Your large chart supports this idea. Right, and again, we could get down to 67.04 and we could shoot for something a little bit lower, and again, that's okay. They haven't made it down here yet. That's okay. Again, we didn't quite get a full divergence to be true up there yet. So again, look, more confirmation and we're going up, right? Now our large chart is really, really, really strong and really helping us out. There's literally nothing on the large chart. So again, remember, it's tempting, but we didn't quite have our rules met for a long trade, right? So since we didn't have our rules met, even though it looks like it could have gone long right there, that's not really it. This is our window for going long. 67.10 to 67.0504. Now, I want to go and I want to take a look at all the pieces here. And again, when you're looking at the small charts, again, it feels like the darn thing ran away from me. And you can see we have a new fib that popped up on our small chart. We want that fib to work. We want that fib to give us divergence at the highs, and we want that little teeny tiny fib on the small chart to get us back to the big chart. Right? Look at our big chart here. So again, we say the same thing that we say every time. Super strong triggers. And look, if this was your only chart on the planet, what would you be thinking? That we're going to pull back to the blue lines of support, and then we're going to go where? We're going to go up to the red lines of resistance. Right? We're going to go, when we break a fib support or resistance, we're going to go to the next Fibonacci target. So you can see, in the big picture, there should be another, 50 or 60 ticks to the upside if we get a pullback. So again, you have to kind of roadmap the big picture for yourself. Where are we going? And again, we always pay attention to the big picture first and get a big road, a big road plan, if you will. And then we have to go use the small charts to fine tune that plan. And when you lose sight of the big picture and you only focus on the small charts, you run into trouble. So let me show you a little bit of a nuance that happens with our trend trades. See right here at the top? See how we took out this magenta line. We stopped it out by one tick. So we call this a pivot stop out, where they go just above a magenta line and then reverse back below it. Almost every time this happens, we have a pivot stop out at the bottom too. So there's two lines that this divergence will create, magenta lines, and then down here, this cyan line. So, and you can go back and study this all day long, but I'm telling you right now, when you stop out the magenta line at the top, you're going to stop out the magenta line at the bottom. So again, remember what we're looking for. We have divergence on a couple of our charts, right? So again, if that cyan line at the bottom is at 67.10 and our large chart says 67.10 is a really good spot, and we're probably not going to get below 67.04, then we have ourselves, really the best of the best of the best. And again, watch this concept. You'll get used to this, and our counter trend traders will actually use those little pivot stop outs as entries, sometimes even for counter trend trades, but let's not go there. Let's talk about trend trades and trend trades only, because trend trades will pay the bills for you. So again, look at the big chart. This trade makes sense, doesn't it? It's a pullback to Fibonacci support, and the triggers are going up. Really simple. That's our trade, okay? Our stop is below all the support. Our entry is above the 14.2 reversal bar marker, and we should go up. So now look at this. I want you to see inside of the trade here. So look at our entry. And again, 67.10 was the cyan line. So again, let me show it to you here. They stopped out the magenta at the top, and look down here at the bottom. They stopped out the low by one tick. It's almost magical. So again, with the trend, with the pivot stop out closest to the 14.2 reversal bar marker, with divergence before it, with a prior cyan line pivot stop out, it really helps you to fine tune that entry and to really be confident that that little spot is going to get you your trade. And again, I probably should have had my 20 ticks in right up there. And again, let me put it in here for you and just show you. Again, look at what we had just on this little chart. A little cyan stop out, so we should stop out 67.30. So I'll put the order at 67.30, and then again, this process repeats itself a lot. Cyan line stop out at the or magenta at the top, cyan at the bottom. Cyan at the bottom, magenta at the top. So you can see this, would have been another 20 ticks from the right spot. Now, think about what's happening here, guys. We're going up, right? I think we all can agree to that by looking at this chart. But sometimes on the small chart, you still have to manage your position. So remember the little rule we just talked about, which is, again, let me show you this here real quick. There's two thoughts that we're going to have here. Number one, we're going to need to break above resistance to get our next long trade. Number two, let me show you here, because we took one long trade from a prior cyan line and support, and I want you to see the same thing here. Remember what we said? If you stop out the cyan line, or magenta line, excuse me, you usually will make it down to the cyan line. And usually it'll stop it out by a tick or two. And again, it just gives you the opportunity to visually fine-tune where to get in. So again, we've already taken the trade once, and if we stop out this cyan line again, there you go, we got to fill. We get the same trade twice. And you can see this is how it ends up for us. So, we call this kind of a bonus trade, if you will. So take a look. Look on the market flow chart, I'll show you, since we wrote the rules out. A magenta stop out at the high over here created a stop out on the low, cyan line. And then going forward, we literally had the same thing again here. We stopped out the magenta line on the 5-1 chart, and we got back to this, or the magenta line, and we got back to the cyan line. So, again, this is an opportunity where our more experienced traders, some of them will do counter trend trades both ways. We're just sticking with the trend this time. So we ended up with 2 trend trades for 20 ticks in the same kind of range-bound window. Now, what do we know for sure? Now we for real have broke through every line on all of our charts, right? Well, you can see it's pretty easy. The fib turned blue. So, sure as the day is long, you can see where our next trend trade is going to come from. Without even really needing to think about it too much, breaking fib resistance, it turns into support, and almost every time that ends up becoming, the mid-band and fibs becomes your next trend trade. Now, read the chart at the top of the 5-1 chart. What do you see? Let me catch up here and we'll show it to you here real quick. No divergence at the top. Synthetic triggers are going strong. Let me move my stop around here. And again, look, up there at some higher areas, obviously we've got our target at 67.50. Now, if you stare at your little chart and you go, oh my goodness, there's a down bar. Watch what happens. I got bumped out of my trade. What happened up here? There was no divergence. There was no resistance. There's no lines. And then now I'm waiting for another trade, but we didn't have any resistance up there. So I shouldn't be out of this position. But I want to show you this is a mistake that gets made a lot. They go, oh, look, there's a down bar. I'll get out. And then, 5 minutes later, they're like, oh, shoot. I made a little bit of money, but the next red line of resistance should have been my profit target. And then I'll ask you in class, and when you post in your chart, I'll say, why did you get out here? Right? So if you get out because of one teeny tiny little thing on your small chart, you start overthinking. And again, I just wanted to give you a visual of what that looks like. Don't do it. Right? So you'll say something like, I tricked myself out of all my money. I had the right profit target up at the red line of resistance. This is the target up here. So this would have been your target. And again, there was no divergence. There was no lines. There was no reason to get out. It was just a down bar. Nothing. So don't overthink too much on the small chart. You have to be patient and wait for your profit targets when the triggers are really strong. And again, that's what it says in the plan under the trend trade section. And I just wanted you to see a visual of this. Now, net for the trades that we've done here just during this lesson, they've all won, which doesn't always happen. But in this case, we've got 100% winners. And, for the trades that we've done, it's 5,000 net profit, with about $90 in commission. 100% winners. It's hard to beat that. You're not going to always get 100% winners, so don't count on that one. Friday was just a really, really, really good trend trade day. And again, if you read your software correctly and you trade, don't make mistakes, right? Don't overthink. And you make sure that when you're doing trades, again, let me get rid of that trade here. When you're doing trades, you're looking at your trigger lines and you're asking yourself the question, is there any reason why I should get out of a trade or move my stop up? Is there any reason why I think we wouldn't have made it to that red line on my smaller chart? And everything's easy in hindsight. So this is why you have to practice. Practice these trend trades with strong trigger lines. And look, we'll go back and look at it, and you can see overthinking on a small chart's not a good idea for you. Small charts are for defining your entry and for recognizing where the spots to get in are. So again, think of it as windows. This is the window where you're going to go short, and then support, the blue line, is where we're going to be getting out. If the triggers are down and there's no divergence, we're going to do it again, right? So we make 20 more. And then if we hit a line and we have triple divergence, we're going to stop, which will keep us out of trouble, giving back any money to the market. They love to take it back, so be careful. And then recognizing, again, no divergence, strong trigger lines, get in at your spot, just believe it, and it's going to end up working out for you most of the time. You're going to take losers, right? And obviously we might have got out a little early on that one, could have stayed into the resistance line. And then when we have divergence, pivot stop outs. Again, if you get in here first, it's okay. You just have to make sure that if you get up to some type of line that you manage out, and then you're ready to retrade again after the pivot stop out. So you might get that same trade twice, which is okay. And then again, recognizing you're not to the edge of your fibs and that there's what? No divergence. So you're going to do another one. And again, this one was helped also by the fact that we had what? We had a market flow long signal. Pretty hard to ignore a long signal in an uptrend when there's no divergence on your 5-1 chart beforehand. And you can see, obviously, we might have left a little money on the table there. And then, again, then we got into this lesson about stopping out the magenta lines. And you can see very clearly we stopped out the magenta lines up there. And when we do that, we usually make it back to the cyan line, which is an awesome entry. And, that actually happened twice for us. So we had 20 ticks once, and we did it again a second time and took 20 ticks again with the trend, not against the trend. And then once we broke out, we got one more long trade. And obviously, I showed you if you overthink on a small chart, you miss the rest of your easy money. Now, still made really good money, but that last little bit cost us quite a bit, didn't it? We could have easily made 20 to 30 ticks on that one. Anyway, that's the lesson in trend trades, guys. When you look at Nexgen and when you're learning Nexgen, learn the trend trades first. That's the bread and butter. You're trading with the rest of the planet. When you look at your page number 2, this is the section. Learn your high probability trend trades first. Let me show you on the website, on the education page, on the trading plan. So look, let me blow this up. We talk about this every day. The first time you're going to spend reading the Pro Trader, learning the high probability trend trades and how to manage your trades. This in the plan, this is page number 2. This is the section where you're going to do this. So again, learn high probability trend trades first. New users, just this first trade is really all you need, right? So the video for learning the basics. Again, remember the looks that we have that make our 2 longs or shorts really easy. And again, let me show you this picture. Super strong triggers on the big chart is going to give us easy long trades. Same thing for shorts. Super strong triggers down on the big chart are going to give us easier short trades. Now, same thing, let me show you. Once you do that, obviously there's 3 videos. The rules, how to manage, spotting the trades, and then how to go back and study the trades. Once you get those down, then the next trend trades are very easy. It's basically wait for something to get hit and then the triggers to roll over. So look, I'll show you a couple of them here. So look, wait for fib support to get hit on the big chart and then the triggers roll over and then you do a trend trade long. Very easy. Or the second one is wait for resistance to hold and with divergence, and then the trigger lines roll. After divergence, that negative number, triggers roll, and then you do trend trade shorts on your little chart. And then you get out at support. Then if your triggers break with no divergence, you do more short trades. Remember that magenta line thing? And you can see the magenta line, that's your second entry short, and you've got all this money going to the downside. And then ultimately, you're going to go through and learn this section first, right? Trend trades, trend trades, trend trades. And then eventually, 6 months or a year into it, you're going to be able to take these key areas that, you know, tend to cause the market to reverse or break, and you can start working on counter trend trades later. So in the beginning, trend trades. Start making some money. Let's get you on the right path first. Again, if you haven't done so, fill out a demo form. We'll get you in our class. We'll show you the software. We'll get you everything that you need to know. We'll show you how we teach. And we'll look forward to seeing you guys in the successful range, day trading the market with Nexgen. Have a great day, and we'll see you guys soon.